Hello and welcome to the Rise Up podcast. We've got another episode for you today where we explore the stories of leaders that are rising above challenges and driving innovation. And I'm super excited to have in our Wonder Tree studio today one of our favorite people that I'm like, you need to be on the podcast. So please welcome with me, Phebe Ellis, branch manager, leader of RWM Mortgage, lots of things in the real estate world. Phebe, welcome.
Thank you. Thank you.
Good to have you here at the Rise Up podcast. And you've said you've not done lots of these, but you've got a lot of gold to share. So I'm excited to kind of jump into your story. And I always like to kind of ask, are you West Texas native, Lubbock native?
I am. I grew up here, went to Monterey High School.
Plainsman. Now,
Plainsman
or Plainswoman? What's the...
I mean, it was Plainsman when I was there. Of course, we're going to have a big reunion this summer. So, excited for that.
Yeah.
Hopefully some of the people that moved off will come in this summer and attend that. But yes, I was a Plainsman. So.
My wife, she and her sisters were all... Monterey Plainsman.
I didn't realize that. Yeah.
In that building on 50th and Indiana.
I know. I just drove by there this morning on the way here. I was like, wow, that's deja vu. I don't get on this side of town a lot.
This is a fun side note. Me having lived on the real estate sales side of things, you live on the mortgage side of things, so we get to work together a lot. Do you drive by areas and neighborhoods and like, yep, finance that? And I'm assuming you have touched lots of homes around that Monterey area, right?
Yes, for sure. Sure.
And every time you're like, flashback to high school.
Absolutely. Yep, for sure.
So high school at Monterey, and then what happened after Monterey?
Well, back when I was in school, I was raised by a single mom, first of all. And back in the day, I didn't know about if there were grants or scholarships or, even student loans that you could get. So, I didn't know about all that, but I did. One of the things I did in high school is my senior year of high school, I was in, they called it back then, Office Education Association. And so I went to school half a day my senior year, and then I worked half a day.
Yeah.
And I started working at Stewart Title Company.
Really?
Back then when I was a senior, and I was I did whatever they asked me to do. I was a little file clerk or runner or whatever, and they really liked my work ethic, so they hired me full time when I graduated high school. And once again, back then, I didn't know about all the things that you could do to get into college. We didn't have the money for me to attend. And so I personally paid for some night classes I took at South Plains, like real estate appraisals, real estate math, real estate law, some of those things. Also, back then, you couldn't get your education online or, all that. So I did a few of those things, but just continued to work in that realm. And then after working for the title company I was there for 6 years, then I moved over to the mortgage side.
Interesting.
So,
well, that's a very interesting, I don't think I ever knew that. And of course, we've got some presence in the title business, so that always perks up my ears. At that time, who else was in the title business? Because it's changed a bunch.
Yes.
Especially, Lubbock's changed, Texas has changed. But you had Stewart, you had maybe Western Title, I assume.
Yes, Stewart Title, Western
Lubbock
Title,
Abstract,
Service,
probably.
and Lubbock Abstract, and West Texas.
Yeah.
Those were the main title. Actually, West Texas probably came later.
Yeah, a little bit later.
But the main four were Stewart, Service, Western, and Lubbock Abstract.
Yeah.
So,
what did you find interesting in the title side of the business? What intrigued you about real estate transactions? Some of the things that you participated.
Sure. So I think the title business, something that was very intriguing for me was just, like if somebody died and they didn't have a will, like sometimes or not all, sometimes all the time what their family has to go through, for that situation if they have to sell a home. Another thing that kind of intrigued me was like the legal descriptions that we have and the surveys and like, especially like a meets and bounds where it's, acreage or whatever, and you start at a point and go to this point. And anyway, some of that was kind of cool.
Yeah, because all we know is like, hey, I live on 24th Street. And like
Yeah.
the legal title world's like, no. There's a lot more
Yes.
specific that we need to understand so that
Yes.
title gets properly transferred and recorded and filed and so on and so forth.
Absolutely.
So what was the relationships that came about to open up the door in the mortgage side of the business?
So our office at Stewart Title was right there at 78th in Indiana, and
Yep.
at the other end of the building was First Federal Savings and Loan.
Okay.
And back in that day, First Federal was, they did the loans for the developers, to develop the land. They did loans for the builders to build the homes, and then they did mortgages.
Yeah.
And so I became friends with those people because they were right down the hall from us. We shared the same bathroom in the building. And so they were like, we'd love to have you on the mortgage side. And so I hopped the fence and went to the mortgage side and started learning, about all the loan products, how to process a loan, what a verification was, all the rules and regulations. And of course, back then we just had plain Jane loans. We just had VA, FHA, and conventional. And of course, that's changed so much over the years. But that was just if you didn't qualify for, one of those products, then you couldn't buy a home,
And the qualification across all three of them, I'm going to guess, was pretty similar, meaning the box was this. Mm-hmm. And you obviously if you're a veteran, you can, qualify for a VA loan. But
right.
The FHA conventional box was like, hey, it's right here.
Absolutely.
And you might slide into this one or that one, but there wasn't a lot of variance.
Right.
Optionality.
Exactly. And by the way, rates back then when I got into this business, I'm going to age myself, but they were about 13%.
Yeah.
So our interest rates right now.
Well, and we'll get into that. That is such a fascinating perspective. I mean, certainly affordability and interest rates, the purchase price of property was significantly less. But still, just psychology. I'm going to say that phrase a few times. Mm-hmm. The psychology and perception drive, to me, more of the purchase decision than the actual underlying numbers. I mean, the numbers make a sense.
Yes.
Like, you got to be able to afford it. But
right.
The psychology of 13% was not driving people away. People may have, not everyone could fit into that box.
Yes.
But people
Absolutely.
were still doing it.
Yes, absolutely. So the other day, I was pre-qualifying a customer that I've had for a long, long time. Back in the day, I worked for Countrywide years ago, Countrywide Home Loans. And anyway, he is now in the Hill Country area, has a business down there. And I got him, I've did his home in his house that he bought there probably 6 years ago. And now he's upgrading or whatever. And anyway, after I sent him his pre-qualification letter, he's like, thank you so much, Phoebe. He said, I don't know if you remember this, but when you did our first home loan, you were at Countrywide and it was for a $39,000 house.
Oh my gosh.
And I was like, oh my goodness, we can't even buy a car for that now. So anyway, it's crazy how it's revolved over the years.
I still remember, and our first purchase was early 2000. I think say 2003, and I had just started a business, didn't have any real income to show for it because it's just new business. Thank goodness our credit was decent.
Yes.
And Paige had a salary, even though it wasn't a lot. It was
right.
at least a W-2 to show. Yeah. And we qualified for a little $70,000 mortgage.
Yes.
And I still own that house. And it's almost paid for.
Yes.
And it's a rental property that will be what I used to pay for college.
Yes.
So buy real estate. I mean, we'll talk about this, but
absolutely.
Even at today's prices, we have a history.
Yes.
Things continue moving and appreciating.
Absolutely.
So, let's stop for just a minute because I don't like to assume the word mortgage, it's a weird word.
Yeah.
Like I understand loan. What is mortgage?
Right.
So we'll even just kind of ask that simple, maybe dumb question.
Sure.
Why is the word mortgage attached to your house and why not just call it a loan? I mean, It is a loan, but.
Well, it's a different type of loan, of course. And the way our forefathers, designed the mortgage is really, it's kind of to protect your home. And so if you do quit paying, it takes a lot for the mortgage company to, kick you out of your house. I like to call it home loan because I feel like a lot of people can relate to that a little bit better. But basically, mortgage is a simple note that you sign, and then there is we call it a deed of trust, which is the security instrument that is filed of record with the courthouse, and that's what allows the mortgage company to take your home from you if you quit paying. But it is a little bit, there is some protections there, but at the same time, when you're buying a house, it's, you understand that you have to pay this back.
I love the phrase, and you've probably used it a lot. It's mostly, if you don't pay, you don't get to stay. And that's, in a lot of states, you actually can stay for a long time without paying. In Texas, I think we're kind of a rules-based, make your payments state. And if you don't, we need to protect those who've invested a lot of money, because I like to point out to people that what drives the ability for families to be able to borrow money for a home loan. And we're so thankful that that option's out there.
Yes.
That drives the economic stimulus, the multiplier that getting a home loan, buying a house, what that drives in the local economy is astronomical. It is like a 10x.
Yes.
Every 100,000, 200,000, 300,000 or bigger has like a 10x number in the jobs and the economic stimulus. So yes, your home, your family can get in a house.
Yes.
But I like to back people up and go, you've got to understand the people that are writing the actual check for you to buy a house, you're writing a small check.
Right.
Sometimes 3% down, 10% down, 20% down. Someone else is writing a significant check and doing it thousands of times over all over the country.
Right.
Billions of dollars, trillions of dollars. Crazy to think about it. They need to protect their investment.
Absolutely.
So they can do it over and over and over and over again.
Yes.
And that protection is you've got to pay. But if you don't, they need something to get their money back.
Absolutely. So, and a lot of people don't realize sometimes, depending on how much the borrower or the buyer put down, if they do default, the mortgage company, by the time they do pay all the attorneys and all the things to get the customer out of the home, and when they get the home back, sometimes they don't even get their full investment back.
No.
Because
I've been a private lender, and I've unfortunately been on that side of the stick.
Yeah, for
the
sure.
home condition, the improvements, the property taxes, the insurance.
Yeah.
There's a lot of things that go into it. So I'm so grateful that we have an industry that has seen it's worth their risk to put in hundreds of millions and billions of dollars so that you and myself have an opportunity to go to families and say, hey, you can buy a home. You can have security in a home. So, the mortgage industry, as you've lived in it for a number of years, is ever changing. It's growing. Different mortgage companies, you'd kind of mentioned countrywide. What kind of moved you? Because, some people shift and change in the mortgage industry, but what has driven you to make transitions, from your first kind of company to a countrywide? And then obviously we'll kind of talk about maybe some of the others, but I'm just kind of curious, what's been that change? Has it been relationship? Has it been opportunity, incentive?
Right. I think opportunity, and, I've always been someone that wants to help others, and so every time I've made a transition, it's been, of course, for an opportunity. With the countrywide situation, I left there and went to a local bank, and, developed some great relationships with those guys and their, employees and co-workers of mine, and of course customers that they would have at the bank. But just over the years, I feel like the opportunity to help others more. And sometimes you also pivot because you see something changing that may not be the best thing for your future.
Yeah.
So that's kind of, some of that.
We're always attached to people, leadership, organizations, cultures that we're not in control of. Mm-hmm. And life is such that sometimes leadership, people, culture, organizations change.
Yes.
And that has a direct impact on how we operate, how we serve our clients.
Yes.
And sometimes it's just, and again, that's just the nature of life is like, okay, this season has come to an end.
And it's time to change.
and that is, let's just talk about this for a minute, because changing seasons, transitioning, it's not easy.
Right.
There's relationships attached to where you are, to where you're going. So maybe talk for a moment. How have you navigated those decisions to see a season coming to an end and the next one coming about? Like what's some of the factors that you try to really focus on in terms of, all right, this is going to help me make a wise decision for myself, my clients, my family, et cetera?
Well, I would say when I was younger, I was more quick to, respond before I really sat down and weighed out, what was going to happen and what some of the results might be. As I've grown older, I spend a lot of time, talking with God about this.
Yes.
Writing some good things and bad things and, all the things. And so I think, and sometimes you still don't make the right decision, but that's one of the things that life is about as well, as learning lessons and, having experiences where you don't necessarily do it, hopefully, again, So anyway, but I guess over the years, just weighing everything and making sure. I'll tell you, when I left the company that I was at for 21 years, part of that was because there was a change there. And so I went to another company and I thought, oh, this is great. And it was. And then they sold almost immediately after I'd been there. And I was like, oh my goodness, I thought I'd be here, for the next chapter of my life until I retired or whatever. But so sometimes you have to pivot without not thinking that you're going to go that direction,
Well, I'll kind of ask this question because I think we got introduced when you were part of the Prime West family, First Bank and Trust. Mm-hmm. How did that transition into First Bank and Trust and Prime West happen?
So they sold. The bank sold in 2018, and it was great for all of the stockholders and anyone that owned stock. And the new company was a great bank, I guess, but they didn't, really care about mortgage so much.
Their emphasis on different bank products.
Right.
And I think one thing a lot of people don't fully understand is when you kind of go from local ownership, which I think that's one of the beauties we love in West Texas is local control, local ownership.
Right.
That their pulse is really on the footprint of the community.
Yes.
And you could see, obviously, the longevity and impact that Prime West had was, I think, because of incredible local leadership.
Absolutely.
And when that changes, it's hard.
Yes.
The priorities of another institution, a publicly traded company in a different state. It's just, it is what it is.
Yeah.
Right? They don't have that local presence. Talk to me about the season, the 21 years that you spent with Prime West and First Bank and Trust. How did that relationship first come about? How did you make that transition into them before the 21 years took off?
Sure. So when I started working for them, I was at Countrywide.
Yep.
And I was, I've always been real involved with the Home Builders Association, the realtors. And so they approached me and said, we'd love for you to come work with us. And so I got to know those folks and made that decision. And it was an amazing decision for myself. And the leadership there, was awesome.
Well, tell me about some of that. Who were some of what were some of the leaders there that just really had an impact on you? What was that leadership style that you just looked at and you said, that's I can get behind that?
Right. Barry Orr, of course, was the CEO, and then Greg Garland was the president. Veda White at the time was in charge of Prom West. She was head of Prom West. And those three were very amazing people.
Yeah.
Their values lined up with mine. I mean, they really, truly care about others. They're, Christians, which is important, and, they were great mentors. And I mean, they got their hands dirty with the rest of us, as far as, doing the work that they expected all of us to do. Yeah. And they really did care, like you say, a community bank for our community, and wanted to get involved with our community, wanted to support our community with, whatever was going on. I mean, they were big supporters of the Chamber of Commerce, and at that time there was a home that was kind of designed for families that were, having some issues or whatever. And so they were big supporters of that, and, just things like that. So, they, yes, there were some, it was almost like family sometimes, you argued and then you made up or whatever. Yeah. But I can remember Barry Orr saying one time about a young gentleman that they had to fire. And he was like, I'm not going to tarnish his name.
Yeah.
He's a young guy starting his career, and that kind of stuck with me over the years, just hearing that. So, just great leadership.
You can, that's such a good, in today's culture where it's like, canceled, don't want anything to do with you. Mm-hmm. And I'll go beyond that. I'll go to my little social media feed and just tell the whole world.
Yeah.
And the culture of honoring, even when circumstances say, this isn't a fit for us.
Yeah.
And that's the case sometimes.
Right.
But we're still going to operate out of honor and respect.
Right. And that's something I learned too, that, from them is, hey, just because it's not a fit for us doesn't mean it doesn't work for someone else,
Well, and I love you even said the CEO, the president, were getting their hands dirty. Mm-hmm. As someone who's following leadership, boy, you want to wake me up in the morning and get me to go out and work hard. It's to see those that, they're sitting in the C-suite, whatever label or title I think of them, but mm-hmm. they're getting down dirty to solve things, create solutions out of, that's impactful.
Yeah, for sure.
Well, let's kind of talk about today. The mortgage industry has gone from just a one-off VA loan, FHA, conventional, to all sorts of loan products. And I think this would be really good to take a few minutes just to even look at today's marketplace, where we are, but even to try to help educate and inform people, hey, there actually are many options, right? So if you're credit score impaired, if you're first-time home buyer, if you're small business, if you're investor. So let's kind of maybe unpack, what are some of the things that excites you? What are some of the loan products that you're seeing that you're like, man, this is great. I want people to know about it.
Sure. Well, yes. So that's been the exciting part in the last several years. As you know, this market has been a little different. And I'm so thankful that I chose to go to work. When I left the bank, I chose to go to, we call it independent mortgage banker.
Yes. Yep.
And so I had no idea that some of these things were available or even options until I started working for an independent mortgage banker. An IBM is what we call it. And so there are products that, you can just think about, different things like I mean, I could go on and on. A lot of people may not understand some of this, but, one of the things that's really cool about our community is we have so many small business owners
Yep.
and entrepreneurs that make a great living for themselves and for their family, but they don't want to pay taxes.
Oh man, I'm a former
And
CPA, so we could speak this a lot.
Oh my gosh. So anyway,
and just to kind of give people, for most of mortgage history, lenders, underwriters, those who are deciding, can I make a loan to you or not, would look at your tax return, which is a filed document with the IRS, to go, you make $75,000 a year on your tax return, so I can loan you enough money that $75,000 can afford it.
yes.
But if it doesn't show up on that tax return, if your tax return shows me that you made $12,000 a year,
Yes.
which, if you don't know this, self-employed people, there's lots of tax benefits that
Absolutely.
CPAs and smart tax preparers can do, that you live on $75,000 a year, $100,000 a year, but your tax return only shows $15,000.
Right.
So you don't have to give the government
Absolutely.
all your money, which we're all grateful for. The challenge has been your tax return only shows $15,000 a year, and a lender goes, I can't do anything with this. But
Right.
now,
Yes, now we can. So, so that's one of the first things I learned how to do was, how to help self-employed people
Yep.
get into homes, and it's been amazing. Like, I'll have people call and say, "Hey, I just." My realtor told me to call you because I just got denied. I'm a self-employed person.
yes.
And I'm like, that's okay. Just send me your bank statements,
So I'll kind of curious to pull that curtain back just for a moment, because having looked at lots of this for other people, what is the documentation? Is it bank statement driven? Is it financials? Kind of what is it
Sure.
that the underwriters can look at in
Sure.
lieu of a tax return
So-
to help give them confidence?
Right. So there's a couple of things. One of them being the bank statements.
Yep.
That's the most popular, where
Yep.
we just get 12 months bank statements. We see what your deposits were, and that's how we calculate your income. Another way is with a 1099.
Yep.
So this is really popular with
Sales commission people.
right, commission
Yes.
people, or even people in the construction industry, like, a roofer or, a
Yep.
concrete person, and they work for several builders that
Yep.
issue them a 1099. And so, we might have a roofer that has,
$200,000. Yeah.
exactly.
A bunch in 1099
And
income.
1099 income. And so, so those are some of the alternate
Yeah.
documents
Yeah.
that we get instead
Yeah.
of a tax return.
Yeah. This is kind of silly, but it's becoming more and more of a world that people collect their income from, and that's the Venmo. Like,
Yes.
I'm like, do you have a good way to demonstrate that Venmo money is revenue,
Yes.
right? And that, it sits in this account. Now we need to kind of move it to a bank level so that we can document it. That's what's going through my brain as I see people in this Venmo world, which is great. A great way to transfer money. You get paid instantly.
Absolutely.
But now my brain's going to, you need to make sure it's documented
Yeah.
in a way.
Well, so I just recently, a hairdresser.
Yes.
That's kind of how people pay their hairdressers now.
And they get paid immediately.
Yes.
You don't have to wait.
And so we just recently did a loan with
Yeah.
Venmo there. Here's something that's on the horizon that kind of blows my mind a little bit, but we're going to embrace it, and that's the crypto stuff.
Yes. Yeah.
It's about to be, we're about to be able to use crypto stuff with a history. So, it's just getting more and more creative in our financing world.
Yeah. And at the end of the day, the same fundamentals still apply, which is the price of the house, the loan, taxes, insurance, interest rate. Can you still afford $1,500 a month, $2,000 a month, $3,000 a month?
Right.
Because I've said this a lot. I'm sure you have too. You don't want to go to sleep at night with stress that can you make that payment? Like,
Yes.
Don't put yourself in that world. That's miserable.
Yes.
There's no beautiful home to me
Absolutely.
that's
Yeah.
worth the financial stress of stretching yourself.
Trying to afford it. Exactly.
Yeah. And that's a different conversation, but that's something the world says more and more and more.
Yeah.
and trying to find that balance of.
Yeah, for sure.
Yeah.
That's one of the conversations sometimes I'll have with someone that, you know, we've gone through the pre-qualification process and they were like, man, I just really thought I could afford more. And so I would say, you know, sit down and do a budget for yourself.
Yes.
You know, what do you spend at the grocery store? What do you know, how much is your car insurance? How much do you spend on gas? Because what we look at doesn't include all of those things.
Yep.
And then they're like, oh, yeah, you're right. Like, I mean, a house payment is just a small part of what we spend each month.
Well, and this is something very few people do. And it's like, would you go 30 days and literally track every dollar you spend? And not just track it, but like go, where did that go? And it's scary and shocking and revealing of like, do I really need to spend money there? And maybe you do. You have the right to. But if you're in a season where you want to really put your money where it's more important.
Right.
It's an opportunity.
Absolutely. You know, at church this last winter, we did the financial freedom class.
Yeah.
And they asked me to help be a group leader in that. And I even learned some things like, I'm like, oh my goodness, I didn't realize I had 20,000 subscriptions of different stuff.
I know.
That is still, I mean, I subscribed for it at one point in time and didn't realize I'm still paying
those subscription companies do not make it easy for you to remember, recall, or get rid of them.
Absolutely. I'm still trying to get rid of Spotify. I don't know how to do that.
Isn't that crazy? It's like, I don't want this. I want to maybe just talk about this for just a minute before we kind of wrap up, and that is it's been a challenging few years in the real estate, the mortgage industry as a whole, because we left this, I'd say, an anomaly of low interest rates. All right. And I guess I'll say I'm grateful for that season to a certain degree. I think it, back in our COVID days, interest rates dropped to just historically low levels, 2%.
Yes.
I have a 2.25% mortgage that I don't want to get rid of, right? And I get it. Kind of what is it that you're trying to maybe educate, counsel clients on who are wanting to make a transition? They're, the home they've been in now for 3, 5, 6, 7 years. Life's changed for them. What's kind of the conversation you're trying to do? The perspective, like you said before, I mean, interest rates are not crazy. So what does that conversation look like? What's been helpful?
Well, first of all, I can remember sitting with my very large team at the time because we were so busy we didn't sleep at that point. I can remember saying, we're going to pay for this someday with these interest rates the way they are at 2.5%, on a 30-year fixed. First of all, that's not normal.
No.
But the biggest thing is that even though our rates have gone up, so have home prices.
Yes.
And they're going to continue to go up.
That's right.
And so this is kind of a corny saying, but in our industry, we've been saying, marry the house, date the rate.
Yes.
Because when rates we don't expect them to ever get back down to 2.5% again. But when rates do settle down just a little bit, we know that there'll be even more people jumping into the market. And the average appreciation cost is 4% a year on a home. And so not only, has the house that you've wanted going to increase in price, but then there's going to be more people in the market that are competing with you to buy that home that you want. And so you may end up paying over market value just to get the home that you want. So my thing is, I try to tell everyone, don't be fearful of rates. Rate is just a rate,
It's a psychological barrier that keeps you from doing what, and again, I'm a numbers person, so it's like every $50,000 of home price increase that the marketplace has, and we've seen a lot more than that, right? That extra $50,000 that you have to now pay for because you waited a year, $100,000 because you waited a few years, that extra $100,000 of cost, even if you got it at 4%, is you're paying infinitely more than if you had gone ahead and found a home, that's great for your family, will be great for your family for the next few years, and settled in at that 6% rate, upper sixes, even low sevens. I mean, I think you can find something in the sixes. I mean, but if rates dwindle back down to the fives,
right,
and you want to refinance, then the flexibility in the refinance side is so much easier.
Absolutely.
Than the flexibility of hopping in and out of houses.
Right.
Like that is not a flexible transaction.
Right.
And you don't want to do that. But you can go through the exercise of calling up Phebe and her team because rates are a little bit more attractive, test the waters, and change that.
Right.
And so I think there's so much wisdom. I know our team on the real estate side, it's like, listen, every year you wait, and again, if you love your home, if you have no intention of changing, that's great. Right. But that's just not the case for a lot of families.
Right.
And your home has probably created equity and value that you can pull out of.
Absolutely.
Because it has gone up since 2000, 1999, 2021, whatever it is.
Right. Well, I mean, we started that conversation about change, when you're buying and selling and doing all the things, a lot of times it's because of some, change that you've had in your life, a baby or, unfortunately a divorce or a death or, empty nesters or whatever. So, a lot of times people purchase real estate because of that, not necessarily because they just want a new house, so.
No, that's right. Well, and we didn't really get much time into this, so we may, come back and have another conversation, but it's like the opportunity to build wealth, not just in your own personal home, which is there, but in the investment side of things. Mm-hmm. I mean, Lubbock, Texas, even though it's gotten more expensive, is still one of the more affordable real estate markets to own passive real estate income from rental properties.
Absolutely.
It's not a get-rich-quick scheme, but over time, I mean, you've seen people in your career that's like, man, they just slowly, patiently held on to some property, and now they've looked up 5 years, 10 years, 20 years later, and they're like, wow.
Yes, absolutely.
So if you have interest in pursuing that, there are great investment products to help people get into rental properties. So
that's one of the things that I wish my husband and I over the years, we do have, some investments in some rentals, but we've had other properties that we've sold over the years, to buy our next. And I mean, I wish we still, obviously we need the money to buy the next house, but looking back, man, I wish we could have, especially a few that were in the Tech Terrace neighborhood.
Yeah, I know.
I wish we could have figured out how to still keep those and buy our next adventure. But that's one of the things I wish we could go back and change a little bit.
That's right. Well, I like to close our sessions with a little bit of kind of some rapid fire questions. So first thought that kind of comes to your brain. What do people get wrong, or when they think about mortgage industry and mortgage officers? What's the misperception you think that you like to kind of dispel? Maybe kind of like, it's not what you think. But
right. I think a lot of people don't think we work very hard. We work all the time.
I know.
Well,
and I'm going to say this because you don't need to say it. What a lot of people don't realize, and I want you to hear this, is Phebe and her team and a lot of other great professionals in the mortgage industry only get paid if that transaction makes it to the finish line. And there are countless clients in transaction where dozens of hours are spent helping, processing, underwriting, counseling, walking through transactions that do not create any income for the team and the company.
Right.
And that's the nature of the business. You work really, really hard, and you're helping people constantly.
Yes.
But you hope there are more than not transactions that make it to the finish line. But that's a challenge.
Yes.
Yeah. Kind of what's maybe one of the boldest decisions that you've made in your career that you kind of look back on and you go, that was a little bold, but I'm kind of proud of that.
I would say leaving the banking world because that is a little bit more security and hopping off on the other side of the mortgage side. I mean, the independent mortgage banker side.
Yeah.
So,
and you may have referenced this, but I'll ask it again. What opportunities excite you as you kind of look at today in the marketplace and leading into tomorrow?
Sure. So I mentioned I've been in this business since I was 17, and looking back over the years, I've mentored so many people that are successful. And I will say when we would be great together and then they would go off and want to do their own thing, in the beginning, it used to hurt my feelings. And then one day I had this aha moment of, it's almost like you're a parent to children and you watch them grow. And so that is probably one of my greatest things, I think.
And I think that's so beautiful, Phoebe, because I think life it's full of relationships and there's a lot of richness there. There's a lot of mixed feelings because, selfishly, I want people to stay connected to me forever, but that's not realistic.
Right.
Like I have a season to get to impact you, to get to lead, to grow together, and that season will eventually come to an end.
Yes.
And,
yes.
Your wings spread and away we go. Last question, always like to ask our guests is, if you were having coffee, looking at your 20-something younger self, what's some advice? What would you tell yourself?
Well, it's all going to work out, no matter what.
Yeah.
And back to this, having team members over the years, in the beginning, when someone would leave me, I would almost not want to be their friend anymore or whatever. And now looking back at that, just realizing don't ever burn a bridge because you never, ever know.
That's good.
You never know when you might be working with someone or you might be working for them, someday. So I think just, in the good book tells us do unto others as you'd have them do unto you. And just realizing as I get older that is so important. Yeah,
that's right. Yeah, so. And you feel better about yourself when you choose that path. I think you release people better. There's so much wisdom there. Okay, if people want to connect to you, Phoebe, to your team, what's the best way to connect? Sure.
My website is phebemortgage.com, and my mom left the O out of my name. A lot of people don't realize this, but the King James Version does not have the O in Phoebe. So it's Phebe. I'm on Facebook, Phebe Ellis-Roach Mortgage, and then Instagram, I'm Finance with Phoebe. And then my cell phone, 806-773-0531.
Yes, absolutely. You're available because that's how we work in this business.
Absolutely. Just call or text me.
Yeah. Well, Phoebe, thank you so much, man. There's so much I think people just don't understand. And I love the story and the journey. And then again, if you have any interest in real estate for your home self, for your investments, this is the family, the people that can take care of you. So don't hesitate. Love working with Phoebe and her team, and love having you on today.
Well, thank you for having me. This has been fun.
I know. It's
Maybe
great.
I need to do more podcasts.
I know. Absolutely. Well, thank you for joining the Rise Up podcast. And of course, our team in the energy space, if you ever need anything in the energy related world, we do lots of things. You can reach us at Get Rise Energy, getriseenergy.com. Again, this is Josh here. Thanks again for joining us, and make it a great day.